of the session. There we go. So the recording have started. Let me welcome again everyone then to our second chapter. That is chapter 12. So it follows then after then a chapter 9, which was then your basic job costing. If you still remember, we said that basic job costing is a reporting method or system then that we've adopted when the company is producing or offering a service then to a different kinds of a product, as we've made an example then about with VW, where then they do then the service. Although then they've got a different types of cars that belongs to Mercedes, I mean to their brand, that is your VW, but because of then the different kinds, they can't combine the job card. They have to separate. Now we are going to look at chapter 12. Well, what if then the production is a production of the same product, but then the only thing that changes is the volume? We're just talking about the volume then of the same product. So we said, okay, therefore the basic job costing then is no longer relevant that in that kind of a product. So hence, and I will look at the process costing. As you can hear, even the word, guys, process, it means then sometimes it can be something that we take from stage 1 to stage 2, 3, up until we said this is the final product. So what you'll see then in this process costing, at times you'll find that then we are talking about process 1, and after we've done then what was supposed to be done in process 1, we transfer then to the second process or to the third process up until then we've got a final product. So we're going to look at that with then the volume. Although we're not going to pay much then on the volume, our main focus once again here is to accumulate the cost. So we will look at that. Surely then we'll be able then to say. I must say though then when we talk then of chapter 12, it's a little bit then interesting chapter. So I'm sure then you are going to enjoy it. I don't want then to say it's a difficult chapter. It's an interesting chapter. I must use then that word. So you'll find it very interesting. Not challenging, but interesting. Let me share my screen so that you can be able to see what I'm talking about. Kwanele, can you please stay muted? Kwanele, please, can you mute then your mic? Thank you. Once again, let me repeat that, guys. And if then we don't have any question, let's stay muted, please. That will assist us in our session to minimize any extra noise that is unnecessary for the class. So once again, then these slide presentations, and they are there. Then if you go to your file and class material, then you'll go then to your module 1. Then once you click on that module 1, then you'll see then the folder of chapter 12, which is your process costing. So you'll have then those slides. And if you look at your textbook, then the third one, then you do have also then this. So this is what we're going to talk about today, looking at your specific outcomes. They say that they want you then to be able to demonstrate competency in the operation of process costing system. So that's what we're going to talk about, this process costing system. That's the point. So we've got a quite number then of assessment criteria that we're going to go through, then identify the features of a process costing system, explain when a process costing system is appropriate, distinguish between normal loss and abnormal loss. Remember, we said now we will follow what is taking place in the production. Hence, then I will find us, and we are going to even go further and talk about the normal loss and abnormal loss. And at the end of the day, they do affect our output in terms of the units as well as the cost. Hence, then they are important also to explain and calculate then the equivalent units. Don't mind for the term now, equivalent units. We are going to explain that at a later stage. But what do we mean when we talk of equivalent units? You don't need them to strike a pulse at the moment and try then to think, okay, what is this equivalent units is all about? You'll understand very soon. So that's another thing then that we are going to go through. A value of working process using the weighted average method and first in, first out method. Come in then those method. And I'm sure then that you are familiar then with this method. You've dealt with on your chapter, chapter 3, when we were talking about the material. So once again, we're going to make use then of those methods. Whoever then has mic is on, please then can you mute yourself? Thank you. Then we'll prepare then the process cost report with opening and closing inventory. That's another item that we're going to go through it. So that's an overview then of what this chapter is all about. It's a little bit long, but I'm sure then we'll be able to cover it in a matter of 2 or 3 weeks. So looking at your introduction is what I've already then covered. And as they say in a production, then it takes place. They say it takes place in a series of sequential processes where the output of such processes is a quantity of homogeneous products, or in other words, similar product. So that's what we're talking about. So when we say that we're talking about series, you can think then of your guys, and as you are doing then your qualification, we can simply say that you are in a process. At the end of the day, come then your third year, then you are going then to be the graduates. So it means that you are in your second year then of being then the graduate. So that's a process we're talking about. Last year you've done cost accounting 1. So then this year, because you've managed then to pass, so all what was supposed then to be done in cost accounting 1 has been done to you, and you show then a competency. Hence then you are doing cost accounting 2 this year. So after then this year, you'll progress then to the third year level and finish up then your qualification and become the graduate. That's the process. That's a series. So we are looking at the kind of the production that takes place now in that series, and of then your sequential processes also then in the process costing used in mass production processes like your oil refining, food processing, paper making, chemical processing, brewing, paint manufacture. So hence we say that then the process here is similar, but we talk of then the mass, the number, the quantity then that changes. So to work out then your cost per unit, you simply take your total cost that is incurred for that particular product, you divide with the output, then you'll get then to the total cost or the cost per unit that we are looking at. So that's how then it works. So these are the features then that are common then to process costing. In order then to make use of then the process costing, we are saying that then we have then to clearly identify then the process cost center that accumulate then all the cost. So those are the first important things and that we need then to see, accumulate records of the cost of each process in respect of completed and incompleted work. Averaging of total cost of each process over the total equivalent production of that process. You might not get what does that mean, but don't mind about that. As we move along, then we are going then to unpack that and you are going to be clear about it. But I don't want then to try to explain now. Let's take it easy. That's what will assist us. And also transfer of then the cost of the output of one process to the input of the next process until an identifiable product then emerge. Hence our saying then we make of the process. Samuel, please, then your mic is on. Thank you. Hence, and I was talking about then from process one, if then we can say that in a production, we've got three processes. So we monitor or we move then along then with our production up until then at the last process. So we'll follow then each and every process. And at the end of the day, then we can say that this is another product that we have. So they just show you then the examples here of the industries then that can make use of the process costing and with then the items then that they are producing. So then this is the diagram then or the flow that shows you then the process cost that we're talking about. So if you look at this, then we've got then process one here. So in process one, we are going to look at the material that is being used at that process, the labor, as well as the manufacturing overheads. Once then they've done their part, they will transfer. Look at that, not to the finished goods, but then to the second process. That is your process two. So process two, then whatever then that was then your closing. In process one is going to be then your opening here. So we'll open then with that, and then we add again the material labor and your manufacturing overheads in that second process. Remember, we said that then our key goal or role here is to make sure that we accumulate the cost of then our product as much as we can up until then we reach then the last stage in our production, which is your finished goods stage. So you can say that okay, now that we are in process two, then we totally forget about the cost that we incur on process one. So we'll carry then those costs along. They'll be a part of then our opening in the second process. So we will see then when we do then our reporting, okay, if you report then for the second process, even the columns and that you are going to open up, they are going to be a little bit different than from the first process one. Or process one. So then to demonstrate this, and I've got then this example then that we are going to look at it. Example 12.1. So I've taken it then from your textbook because then for the argument's sake, so that we can able then to clearly demonstrate what we are talking about. They say the cost accumulated in process X amount to 12,000 rands, consisting of direct material of 2,000 rands, direct labor 4,000, and your overheads of 6,000. Hence, then you've got then this total of 12,000 rands. The completed units of process X are now transferred then to process Y. And you see that? So it means that process X is our first process. When we done then with then that process, we transfer then the products with their cost then to the second process, which is process Y, with that cost of 12,000 rands. This amount of 12,000 became the input of process Y. In process Y, direct labor of 8,000 and manufacturing overheads of 12,000 are added to give a total accumulated cost of 32,000. Now, can you see that in this second process, it's not mandatory that we must have the material as well, because sometimes the material can be added only in the first process. You may think then often the brewer. So then the first then material that they will use probably then it's going to be then the water. In fact, it's not even probably, surely it's the water. So if then they boil the water in the first process, once they've done that, they can then add another water in the second process. So if then in the second process they have then to cool down that water, that's then their part. They will take the water and then cool down. So you could see then that they will need only labor and your overheads in that process. The completed production of process Y and the accumulated cost are then transferred to process Z. In this process, which is the final stage of the completion of the units, direct material of 10,000, direct labor of 12,000, and manufacturing overheads cost of 18,000 are added to arrive to a total cost of production of 72,000 in total. So now using a T account, show the process costing flow. So that's what we are going to demonstrate or to do using just then a normal T account, so that you can be able then to see then what we are talking about. Let's move out then of this. and have then the new folder then for our chapter 12. So we said that we start then with the first process. That is process Y. We've got then the direct material, direct labor, manufacturing overheads. Let's look at the values. It's 2,000, 4,000, and 6,000. So that's the values then that we have. So we'll put that then on the debit side because that's where then we incur then the expense, because this process then now will send an expense account. So you've got 2,000 rands, 4,000 rands, and your 6,000 to arrive then to this total of 12,000 rands. So they've done then what they're supposed then to do in process Y. So they are not going then to take then the information then to the finished goods. Instead of taking them to the finished goods, what I'm doing, they will take it in a process X. Then these 12,000 rands. So we open up then another column then for process X. The opening then here will be from process Y. We receive then that 12,000 rands. And we don't have direct material, but we do have direct labor and manufacturing overheads on the process X. Believe the question was saying so. Oh, this is then a process Y. Why don't you correct me, guys? Because this is process Y, then it will be X. No. This is process X. This is your process X, then from process X to process Y. From process X here, right? So we're on process Y now. Look what happened then to that process. In process Y, direct labor of 8,000 and manufacturing overheads of 12,000 are added. So I've got a labor of 8,000 here. And manufacturing overheads of 12,000. And to arrive then to this total of 32,000. I hope then everyone still follow. So then this is our second process. We still have got then the last process, which is process Z. So now from process Y, again, we're not going to transfer then to the last process. We are going to transfer the information to the process Z, the total of 32,000. And you go then to your last process, which is your process Z. Then again, process Y, we receive that 32,000. Then we've got a direct material, direct labor, manufacturing overheads. Do that process. Let's go and check the values. So direct material is 10,000, 12,000, and 18,000 overheads. 10,000, 12,000, and 18,000. And that gives us another grand total of 72,000. That's where then you'll say finished goods 72,000. So then this is then the process and that we're talking about, guys. As you can see here now, we started from process X with our material labor overheads, then we transfer the information then to process Y. Process Y added whatever then that they were supposed then to add, and we take then to the last process. Now we've got the finished goods, whatever number it is, but then now we have got this grand total of 72,000 rands. So that's then our total then cost then that we have. So I'm hoping by now then you are able to see then the flow, the process then that we are talking about. So that's what then we do then when we talk of then the process costing. Thank you. Then we move on. One of the things then that I've mentioned here then is the losses. But at times then we incur then the losses then in our production process. So these losses affect then our output in terms of the quantity as well as then the rand value. Hence, they are saying here in many forms of production, the quantity or the volume of output is usually going to be less than the quantity of then the input. So unavoidable losses are within acceptable limits and are called normal losses, which is true, because if then you may think then of then the brewer, if then they boil the water, we can't expect that then exactly the number of liters that have put it in, they will get then at the very same number of liters then at the output or after then they've boiled that water. So the evaporation then is going to take place and it will take then some of the units or the liters then from that water. Hence, we call that this is something that we cannot avoid. Hence, we said that it is a normal loss. But then avoidable losses are above then the expectation. So as a company, we set then the limit, we set then the certain percentage. We said, okay, we know that if then we boil 20 million liters, we know that something like your 2% is going then to be a loss. But at times, you may find that now all of a sudden we've got a total of 5% that we lose. So there's this extra 3%. We cannot increase in our normal loss percentage. We'll keep it at 2%, but we'll say that this extra 3% is going to be our abnormal loss. Now, how are we going to do the report then for that? We've been guided then by International Accounting Standard number 2 that prohibits then the inclusion of abnormal losses in the cost of inventory. So in other words, it says that now let's report that as it is or as individual then to our statement of financial performance. So if then we don't include the abnormal loss cost, it means then we only include the normal loss cost in our inventory. Hence then they are stating then further here about the normal loss, where there's a normal loss, which is then evaporation of the liquid, so dust then from the cutting of a timber are absorbed within the product cost. So in other words, then it will ultimately go to appear then in our inventory cost. These losses occur under efficient operation condition. Then the cost of normal loss must be included in the cost of good production units. So in other words here, guys, when they say if then at the beginning then of your production, you started then with 1,000 units at a total cost of 2,000 rands. And all of a sudden, you can work out then your cost per unit here and see then how much then is your cost per unit. If then you've got a total of 2,000 rands, with 1,000 units, and see that, okay, then it means our cost per unit is 2 rand per unit. For argument's sake, let's say that after your production, the output now reduced then to 800 units. Unfortunately, we cannot change then the total cost. The total cost will remain to 2,000 rands. So if we say then the lost units of 200 here is our normal loss. So in other words, we are saying then the cost of these 200 units must be absorbed by the good units, which is your 800. So what you'll simply do, guys, then you'll revise then your cost per unit. You'll take your 2,000 rands and then divide now by 800. And you'll have then the new cost per unit of 250 rand instead of 2 rand per unit. So that's what then this statement is saying then about the cost of normal loss. That's how then you absorb it to the good units. You don't change the total cost because anyway, you can't go back then to your supply of raw material and say that, look, I bought you then 1,000 units, but after then the production, then it goes down then to 800 units. Your supplier has nothing then to do with that. So then this is then the calculation then that we talk about of the cost per unit, total cost divided by expected good output. In this case, in this example, then it's going to be this 800 units that I'm talking about. And then the amount realized from the sale of any imperfect units must be credited to the process account, reducing then overall cost. So that's a little bit of benefit then that you can have. Then coming then to the abnormal loss, they say abnormal losses are losses above then the regarded or what is regarded as normal, as I've explained that, caused by plant breakdown, industrial then accidents, defects then in material or defective then a machinery. Sometimes then we can have then the strike, and that can cause then the abnormal losses then in our production. Treated as a period cost and written off in the statement of comprehensive income. So we did make mention of that. An unexpected favorable condition may cause abnormal gains when actual losses are less than expected. But unfortunately, then again, our syllabus and we don't have then the abnormal gains. But just to indicate for you, then at times you can have then what is known as abnormal gains. So you can expect then to have that as well. So don't be surprised then if then you come across then with an exercise then where then we've got abnormal gain. Now let's look at this example then that we have and see how are we going to do our report if now we've got a normal loss or we've got losses in our production. They say the cost accumulated in process X amount to 12,000 rands, consisting of direct material of 2,000 units. Sinalo, I don't know what's going on there. You have unmuted yourself. If then you don't have any questions in relation then to what we are talking about, please then stay muted. I've assisted you, then I've muted you. Please stay like that. The cost accumulated in process X amount to 12,000 rands, consisting of direct material of 2,000, direct labor of 4,000, and manufacturing overheads of 6,000. The completed units of process X are now transferred to process Y together with the cost of 12,000 rands. We assume that from an input of 1,200 liters, there is an abnormal loss of 100 liters in addition to the normal loss of 200 liters. Now again, using the T account, we are going to show how then these losses are going to be recorded in our reporting. So then this is then our process X. Now in this case, then what will assist us then is to have then also then some sub columns. So let's have then your units, cost per unit, and the total column. Same applies on this side. Units, cost per unit, and your total column. So we start then with our input side. If you look at that statement, that said that we assume that from an input of 1,200 liters, there is an abnormal loss of then that 100 liters in addition then to the 200 liters, which was regarded as a normal loss. So then we know that, okay, then we've got an input here of 1,200 in total. So that's what then we know in terms of then our units. So what then you have, then you can indicate, okay, then our input 1,200. So just have a total again here of 1,200. Piece of an advice, come then to the output side. Just record then again that 1,000. Excuse me, sorry. We're supposed to go to the units of 1,200 because then they have then to balance. You must have then the same units on what you have on the debit side must be same as on your credit side. In other words, you must balance your account. Now let's look at the costs that we have. So we've got a total amount of 12,000 rands, and they've separated, okay, is how much then for your material, labor, and overheads. But what we'll take then, we'll take the total cost. Oh, but the total cost is 12,000. So we can work out then our cost per unit, 12,000 rands, and we divide by 1,200. Then our cost per unit is 10 rands. Now we want then to do our report then after then the production. So we first look at the completed units. That is then your good units here. Then again, we've already know that, okay, we've got the normal loss and abnormal loss. Sometimes then you can have then the closing, but in this case then there's no closing. So going back then to this information, look at what they've said about the losses. They've indicated, and we assume that from the input of 1,200 liters, there is an abnormal loss of 100 liters in addition to the normal loss of 200. So you do know that that tells us that, okay, we've got a normal loss of 200 liters and abnormal loss of 100 liters. That's 200 and 100. So that means that out of then that 1,200, can you see the advantage of putting then that total units? It assists, it guides you then to work out your completed units. So it tells us, okay, we've got 900 therefore as a completed unit so that we can have then that total. What then the International Accounting Standard said then about then the normal loss. They say that we don't put any costs then to the normal loss. So we can't have then any cost then to these 200 units. So it means that the cost of these 200 units is going to be absorbed by the good units, which is your 900 and 100 units. Other words, then when you calculate now your new cost per unit, you need then to add the two and have 1,000 units with the total cost of 12,000. So we take then the 12,000. Now we divide by 1,000. So then to give us then the new cost per unit of 12. So we say multiply it here by 12. Again by 12. Now, can you look at this? Then our cost per unit in the input side, it was 10 Rand per unit, but then it changes then on the output side. Then from 12, then from 10 to 12, because we've absorbed then the cost of this 200. You'll see then when we multiply that and see then how did we absorb then the cost of that 200 units. So then our total cost of the completed units is 10,800. So here is going to be 1,200. Then when you add the two figures, they give you a total amount of 12,000, which is equal to the total amount that we have on the input side. Because we cannot reduce the total cost just because we've got a losses in place. So that's how then you absorb then the cost of the normal loss units. I hope then it does make sense. Or is there any question? I'm happy then that I will assume that it means that then at least then everyone is still following then what we are talking about. If then there are no questions, we are still all clear as to how then we've accommodated the losses then in the process. But then in a long run, we get tired of using then the T account and say that let's claim then who are we? Why then we keep on relying then to the financial accounting guys then to say, okay, can you assist then with the reporting system? Why we have then to keep on using then your T accounts and said, okay, let's come up then with our own. Hence then we said that we introduced then the 3 statements then to use in order then to do our reports then in the process costing. So instead of using then the T accounts, we developed then these 3 formats of the statement to make then our report. The first one is quantity schedule. So in a quantity schedule, look at that. As the word again suggests, guys, say quantity. It means in here we only report then the units only. No rand figures then must appear then in that statement. You just focus on the units only, followed by the cost statement. That's where then you taking out the cost. And lastly, then we've got what we call the allocation statement. So in your allocation statement, we combine the two statement, your quantity schedule and the cost statement. So now let's combine the two statements and make then our report then, and it assists you then to check whether you've done your recordings correctly, because as you said, it's an allocation statement. It has to balance. I'm going to show you then how then to check then and you see then your balance then in your allocation statement. So these are the 3 statements then that we develop. Rather than using then the T account, we come up then with those statements. Look at the quantity schedule. They've given you some further explanation about that. Report on the physical input and output quantities. Only input quantities are material introduced into the production process or input material received from the previous department or process. Output quantities reflect the completed units, or your finished goods, or output to be transferred then to the next department, work in process, and normal or abnormal losses. That's what then you are going to report then to this quantity schedule. Then moving then to the cost statement. So the total production cost incurred for the period in a process includes the cost of opening stock, incomplete units, cost from the previous department, and any further direct material, labor, and manufacturing wares cost incurred. Once again, as we've said that then we will make sure then that we do accumulate the cost of our production. So if then you've got a previous process cost, you make sure then that you include then those costs. The unit product cost and cost per unit for direct material, direct labor, and manufacturing wares are determined in the cost statement. So that's what the statement is assisting us. So at the end of the day, you'll be able to calculate your cost per unit. And now we come then to the last one, the allocation statement. Provide a reconciliation of the cost that appear in the cost statement. So we reconcile then these cost versus then the units that appear in your quantity statement. Shows cost allocated to finished goods or units transferred then to the next process. Shows remaining cost attributable to work in process and any abnormal losses or gains incurred. So that's how or the purpose of your allocation statement that is given then for us. Right, then we've got then this example then once again that we are going to use in order then to see or to demonstrate how are we going to do then this statement. Then it's similar then to the example that we've looked at. The cost accumulated in process X amount to 12,000 consisting of direct material of 2,000 rands, direct labor of 4,000 and manufacturing overheads of 6,000. The completed units of process X are now transferred to process Y together with the cost of 12,000 rands. We assume that the input of 1,200 liters and no losses occurred. So in this case, we just to simplify things, then we just said, okay, there are no losses. So we are required then to prepare the production quantity schedule, cost statement, and your allocation statement. Let's go straight then to this statement. So we start then with our quantity schedule. So on this side, we've got input. I like then to put also then the details, but if you look at the textbook, then they leave that column open. But for me, I believe it's quite important then to give it a name and call it then as our details column, then output. So these are just in the fundamental 3 columns then that we open then in our quantity statement. I can see the hand then in Ganati.
Andazi noba ndim lo unengxaki na qha into eyenzekayo apha uthi ufika kwesinye i-slides zibe kudala ugqithile kuso, so andiyazi noba is that the case nakwabanye abantu na.
Is it hard? Sorry about that, but I think then, is it the case then to everyone?
Yes, sir.
Yes, Mjad.
Yes, sir.
Okay, I'm sorry about that.
Yes.
I think then it's a network then an issue. Probably then on my side, then if then is something that is affecting then everyone. Because I've noticing even then in front of me, I've connected then with 2 devices. So it takes time then to move on then to the next slide. I'll try then to delay a bit up until then it appears and so that I can talk then to the slide then that we have in front of us. I believe at the moment now it displays then our quantity statement, where then you've got your 3 columns, your input, details, and the output column. So those are the 3 fundamental columns. We're going to expand then from here, but for now, these are the fundamental or main columns and that we open up then in the quantity schedule. So the first thing then that we record here is the units. Units then are introduced then in our production. So that's what then we started with. So looking then at our units then are introduced into our production. Let me try this, guys, and to see if then the network is not going to improve. Probably, let's guess, then it's going to be much better now. We will see and we'll monitor it. Please then tell me again if it's still doing the same thing. I'll try then another option and see. So looking then at our question or then the example then that we're using, that is then that example then at 12.3. I could see then on my side then it's taking time again then to display then the example because I've already shared then the question now, but it hasn't turned yet. Then I have to display the question. Is it that so then also on your side?
Yes, sir.
Okay. Let me try, I'll try then another option and see if am I not going then to win if I'm using then another connection. You see, sometimes then these network issues then they failed us, but what can we do? They say that the life has to go on. Let me just quickly then switch then my connection. Just bear with me a minute. My connection is not to improve. On my side, then I don't see any improvement because it hasn't changed then so far. All right, let's hope then for the recording, then it's going to go according to the slides and that I'm presenting. So my apology then for what is happening. So when we look then at our exam, then remember we said then we're talking about quantity schedule. And in the quantity schedule, we record only the quantity, not then the rand figures. We don't need any rand figures. So when you look at the question, these are the number of units that we're talking about. They say here now we assume that the input is 1,200 liters and no losses occurred. So that's that 1,200 liters that we're going to record. Then we come then to our quantity schedule. In your quantity schedule, then I will record then this 1,200 liters. And your total here 1,200 liters. Remember what we said, that in the output column that we record again, then at the same amount that appear in your input column, you record then that same units again in the output column. Hence, and if then our total then input is 1,200, you don't even wait, then you just go then to the total of your output column and put then that 1,200 again units. Being in liters or whatever then that we are using, but in this case I think they are using liters, so we're going to record or put it as 1,200. Then the next thing then that we have then to look at is the units completed. That's then our next unit center that we have. So since then they've instructed us or said then to us, and we assume that there are no losses. It means that what we've put it in the production is what then we have then as output. So it's going to be 1,200 again. So you'll have then that 1,200 again in the output column there. Then that's it. That's what you are going to do when you show up. Then when you do your quantity schedule, you finish it. That's simple. Then like that, like this. If you've got only completed units, you move on then to the next statement that we have, which is the cost statement. So remember, we said that one of the things then that we calculate in the cost statement is to work out then on the cost per unit. So you show us, Bukena, what is the total cost? And we put what we call the equivalent units. We will talk about that later on. And then you've got your cost per unit. So those are the three columns again then that we are going to open up then for this cost statement. Again, you've got your direct material, direct labor, and the manufacturing overheads. Going back then to our exercise, we've given a total of 12,000, which is made by 2,000 of material, 4,000 of labor, and 6,000 of manufacturing overheads. $2,000 here, 4,000 in your direct labor, and 6,000 to the manufacturing overheads, giving you a grand total of 12,000. Then we put it then our equivalent units. Now for your equivalent units, guys, then you go then simply now in this to the output column, because we've got then there's three columns here. Then we just look at what appear in the output column is 1,200 units. So it's what we're going then to use. This is then the total here, 1,200. 1,200, 1,200. You don't have to add then that. It's because these are the number of units then that we are producing. That is why we are using then those units to calculate our cost per unit. So it's going to be in your direct material, is going to be your total cost of 2,000 divided by the 1,200. So it gives you then your R1.67. Then comes then at your direct labor, 4,000, you divide by 1,200. Gives us R3.33. Then the last one will be your 6,000 and divide by 1,200. Then it gives us 5. Then you add your total cost column. And you've got the total cost column, which is equal to 10 rands. which is the same then when you say 12,000 divided by 1,200. So it takes you then to that 10. But then to show it then as per your element of the production, that's what is going then to be. Now we move on then to the last statement, which is called an allocation statement. You can make it then into two columns, then that allocation statement. Excuse me. What guides you then to do your allocation statement, guys, then is the output column of your quantity schedule. You simply go back then at your quantity schedule. Look at the number of units that appears there. You've got that 1,200 units. Then you go to your details column to see then again what mix in those units. That 1,200 units was made by your units completed. So that simply means that that's going to be your starting point. Units completed. So we've got 1,200. We can simply multiply then this 1,200 by 10 Rand, which is our total cost per unit. Or if you like, you can take it one by one and say, okay, I've got 2,000 under direct material. I've got 167 that goes then to the direct material, 333 your labor, 502 your manufacturing overheads. But it's unnecessary if then your output is 1,200, because we are saying that this is the completed units. So if then you are saying these are the completed units, it simply means your direct material is there at 100%, your labor is there at 100%, and your overheads is there at 100%. So just take then your total cost per unit. You don't have then to waste then your time. So it's going to give you 12,000 rands. And when you look at you compare to see if then it does balance then this total and what appears on the total of your total cost in the cost statement. So we've got that 12,000 rands, and we prove then again that 12,000 rands is made by our completed units and transferred then to the next process. So that's how then you show. Still then quite simple now. It's going to get then more interesting as we move on. But then these are the statements then that we are going then to use, guys, then to do then our reporting. So that's how then you draw up then your quantity schedule, cost statement, and your allocation statement, instead of using then the T account. So just forget about the T account now. We've got our own statements that we're going to use then to do then our reporting when we use or we draw up then the process costing reports. So that's the statement that we're going to use. And that's it then for today. Now we've got then our statement. But okay, these are the three statements that we have. We are going then to take then up then again then when I heard that tomorrow then is a closing date. How I wish, guys, then we can say that then we are not closing, so that Friday when we carry on next week then we move along and keep then the momentum that we have. I'm worried about this break, but what can we do? If then but yeah, I'll speak then to your class reps about this. But then this brings us then to the end of our today's session. We're going then to stop here. We'll just go through again then these presentation slides and see if then you follow then what we've said then today on process costing, and try then to make sure, guys, then you do understand then these basics. Then we're just laying the foundation for today. I don't want anyone then to be lost. If then you didn't manage then to get this concept now, because it's going to build up then as from our next lesson. We are going then to build then from here, and it's going to get more and more interesting, and I don't want you then to lose it. So make sure then you did understand what we've done then today. That will help you a lot. Thank you so much then once again then for attending then our today's session. I'm going to stop then the recording, and thanks also then for staying muted and not interrupt then our recording. It's going to be of assistance then to everyone. Once again, this recording, I'm going to download it and post it on Teams. Unfortunately now, I'll try then to post it via WhatsApp, but because then it's a big file, then I'm failing then to post with WhatsApp. I use then to compress it, but I even try to compress it, but still then it doesn't take. So I'll use again Teams and then to post another session. Hopefully then you'll be able then to download, especially those who didn't make then to the class. They will be able then to follow then the recording. Thank you so much.